Hello, Maverick Traders. This is Rob Reinhold coming from New Zealand. It is nice to see you. Let's get into this market. In this session, we're going to talk about the news of the week. We're going to be looking at what happened in all the sectors, and we're going to take a look at some setups. I've got 5 setups for you here this week.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
All right, before we jump into it, I want to talk again about our Maverick Summit coming up. This is only for Maverick traders. It's going to be April 26th and 27th in Las Vegas. Everyone should already have an email with information on it. But we've been getting a couple of questions, and one of the questions is, what are we going to be discussing? And this year is going to be all about how to use AI to make you a better trader. So that's what we're going to be focusing on. We're going to dive into some large language models. We're going to go through how to backtest, how to forward test, how to write algorithms. Basically, we're going to take AI and show you how to use it to become a better trader. So if this is something you're interested in, Maverick Traders, please come join us in Vegas. It's always a great time. Let's jump into the market. All right, last week we had a sell-off continue. So if you remember last week on Wednesday, we made new all-time highs, and then the market fell apart, and we continued to sell off all week long. And actually, we sold off all week long until about 3 p.m. on Friday. 3 p.m. on Friday, the market was still looking really weak. And then we got this monster rally at the end of the day. But for the most part, the market still closed down. At one point, the NASDAQ was down 5% and ended up down 3.5%. Why did this happen? Well, we have several things going on at the moment. We got that consumer sentiment report last Friday that showed that the consumer is not feeling great about their current situations. The inflation expectations are going higher. And then we had President Trump this week say that the tariffs were going into effect against Mexico and Canada on March 4th. So look, we have lots of stuff going on. We're seeing some economic growth start to slow down, and these tariffs are likely going to hurt that. The reason we got the big rally on Friday was that Mexico came out and announced that they would be willing to put tariffs on China to avoid U.S. tariffs on them. And this is very possibly the end goal was to put tariffs up against China, because in 2018, when the U.S. put tariffs on China, China did a few things to kind of avoid the tariffs. The first thing they did was they devalued their currency, let their currency fall. And then they also started to work through intermediary companies in Mexico. So I think maybe these threats against Mexico and Canada of tariffs are really just to get them to strengthen against China. The market liked that. The market liked it. The market did not like this week when they thought that Canada and Mexico tariffs were going to go into effect. That was really bad news and why we got the big drop. So as you can see here where we are, maybe tariffs go into effect, maybe they don't. March 4th is the deadline for that decision. Let's talk about some of the economic reports we got last week. Consumer confidence. We got another consumer confidence, and that was even worse than the one on Friday. This one was just atrocious. Inflation expectations really jumped. Then we got rising unemployment claims. Now, this is something you need to be prepared for as we are getting layoffs on the federal level in the federal government. We will see unemployment claims go up. We will see joblessness. We will see all that stuff. That's just a guarantee. We know they're cutting jobs. These are going to show up in the numbers pretty quickly. Then we come down here to durable goods orders. The headline number was good, but when you took out cars, it was actually a miss, and a pretty big miss. And then on Friday, we got the core PCE price index came in right in line as expected. So not great, not terrible, just right as expected. So everything here shows, again, a weakening economy, just a little bit. Not bad, but weakening economy. The markets, they sold off for the week. Now, the Dow was up, actually, for the week, but take a look at the S&P. down 1%. The S&P jumped 1.5% on Friday. So at one point, this was down 2.5%. The Qs down 3.4%. At one point, these were down 5% for the week. Bitcoin and all the other cryptos got absolutely crushed, and gold that just made a new all-time high, it also backed off quite a bit. So just selling across the board. But if we take a look at the charts, and again, everything we talk about, I call cocktail talk. It's always fun to talk about, but when it comes down to trading, you got to trade the charts. And I pointed out last week that 5840 on the S&P was ultimate support. And until it broke below that line and then rebounded and failed, I cannot get bearish. I cannot get overly bearish on my trading portfolio. If you take a look and see what happened on Friday, we held that point. We held that point and we rallied off of it. Okay, it brought us just back down below the moving averages. But, like I said, we are in this range. Until something changes, we can't really make any trending bets one way or the other. Looking at the NASDAQ, the exact same thing happened. It came down to 500 with the Qs where it had support, and it held that level. We're still well below the moving averages. We absolutely could get maybe a couple days of bouncing off this. I do think this was a decent bottom that we put in, but we're still in the lower half of the range. Until we get up in the higher half of the range, I just can't get really bullish here for any reason. That being said, I can't get overly bearish. I need to be a touch bearish because we are below moving averages, but again, until something breaks, we're just really at a neutral here. And instead of showing the heat map, I actually wanted to show the RSP. Now, the RSP is an ETF of the equally weighted S&P 500. Now, this is just a curious chart because you can see that it had a really big fall in December. If we take a look at what we saw in the Qs, take a look at what happened in December. The Qs went up in December. They pulled back a little bit, but they went up in December. What we saw was that very narrow market where the big blue chip tech stocks all did really well and the average stock did not do well. I want to just show you over the last few days, we've sold off from 183 down to 179. Okay, that's like 2%. That was a 2% fall in the RSP. If we take a look at what the fall was in the Qs, this was a huge, huge fall. So what we've seen is that in December, the Mag 7, they all outperformed and everything else underperformed. Now, over the past little bit, what we've seen is the market is actually holding in there okay. If you were to take a look at this market, not the S&P, not the Qs, but this market, all of a sudden, this is much more neutral than everything else. So if we strip away those Mag 7, that is 31%, the market is really quite neutral at the moment. And that's where we've been and why we need to stay where we are, because that is what the chart is showing us. So look, the market is still range bound. Until we break and retest, we cannot make any big trending bets. We just have to assume it's going to be messy. And guess what? I think that's an easy assumption to make, that it's going to be messy with all the news that's going on right now. It's just crazy. So understand, we have higher volatility than normal. We have a president that is making announcements that's causing stocks to move intraday 1 to 2%. And yet the market is not going anywhere. So how in the world do you trade that? Well, we're going to talk about some methods. First thing we always like to say is sectors. There are still some sectors that are telling good stories. There's still some stocks in those sectors that are moving in predictable trends. But overall, this market is absolutely just sideways and a little schizophrenic, just jumping all around. Next week, it's the first week of the month, so we have manufacturing, as always. That's going to happen on Monday. We have manufacturing services on Wednesday. And then on Friday, we have the payrolls report. Now let's talk about this payrolls report. Now this is going to be the February payrolls report, and they're expecting 156,000 jobs. The big question is, has there been enough time for the cuts of federal jobs to be felt in this report? Probably not. And that's what economists, much smarter than me, that put these numbers together, economists don't think it's going to show up in this number either. So this is why I don't feel like this report matters as much as previous employment reports, because I think everyone knows that whatever comes out on this, the real story is going to be the March numbers. So I think this report is going to be important to the market, but not as important as others. Ultimately, I don't have any call whether it's going to be good or bad, up or down. I think the market is telling you with the chart that it is messy right now. No one really knows. So the fact that no one really knows, we've been sitting between a plus 0.5 and a negative 0.5. We're just now at a negative 0.5. This is really a zero. It's a zero market here. And what do we do for the week? I think we probably have a little bit of an up week. I think that bounce on Friday was fairly meaningful at the end of the day. It came on some big volume. And I also think that if the tariffs get delayed again, which I think there's a really good chance that the tariffs get delayed, then I think we will likely have an up week. Again, this is all just speculation. Nothing will change until the charts change in my mind. As I said, there are still sectors telling some good stories. If you're looking for trending positions, let's go ahead and take a look at those sectors. Last week's performance, we had the worst performer, tech. So consumer was our weakest sector last week. That was one of the weakest sectors, but tech was definitely the weakest. What was the strongest? Financials. We're going to take a look at these financials, and you're going to see that the financials, in the 4 days that the market went down, the financials did not go down. It was a great signal that when we finally got a turn, financials were going to fly. Real estate, healthcare, we talked about defensive sectors doing really well. Those did well. We'll take a look at the industrials. They did the same thing as financials. Not quite as strong, but they held in there really well. We are also bullish on consumer staples, and those had a nice week as well. Let's see what changed in the scorings in the sectors. Taking a look at utilities first. We were at a +2 last week, back down to a +1. So backing down a little bit on utilities to +1, but still slightly bullish. Communication services. They went from being a +2 to a 0. So we're now at a neutral on communication services. Could this be a bull pullback? Yes, it could. Yes, it could. But if you're making any new trades right now in communication services, they can't be as bullish as they were. They just can't. The scoring is just not showing it to be there. Real estate went from a +1 to a +2, so that's an upgrade in real estate. And you can see here, the candles look great. I mean, the market volatility last week with big up and down moves, this thing just cranked higher very, very predictably without much volatility. So real estate, I really like that on the long side. Healthcare is looking great as well. Check out these 5 candles. Really completely different than what we saw in that Qs. This market is moving and working just fine. So healthcare remains at a +2. These next 2 sectors, industrials and financials, these ones got really hit last week. And I said, look, all of these cyclical sectors, these things that really rely on economic growth, they got really hit last week. Take a look at how stubborn this one was. This one was very, very stubborn. Gap up, sold off, gap up, sell off. It was just very stubborn, refused to go down, and then on a good day, we got a nice pop. So that goes from a -1 to a 0. And financials. Again, I want to point out this one. Look how stubborn these candles were. As the market was falling apart, these things were just holding and holding and holding, and then we get one good day, and boom, it pops. So financials, to me, is one of the best looking sectors along with real estate. I think real estate and financials are the best too. Here is consumer. Take a look at the difference on these. Consumer, it fell. All the days that the market was weak, it fell along with it. Yes, it had a bounce back at the close, but that is not great. So that's going to remain in -2. Coming over here to consumer staples, you can see it remains at a +2. We had one red candle on 5 days, just a really strong set of candles there, going to remain at a +2. Technology, same thing. When the market was falling apart, it was falling apart. Technology was really leading it to the downside. Yes, we got a good bounce on Friday. We could easily bounce up a little bit more, but it falls to a -2. Materials, as you can see, flat as flat can be. Great sign that it didn't fall apart when the market was weak. But guess what? It also didn't rally when the market was weak. This is telling me that this sector really is pinned in here at a 0. And then energy we had at a +1. It stays at a +1. If we take a look at the movements this week, you can see that the downgrades were utilities, comm services, and technology, and the upgrades, real estate, financials, and industrials. I think all of the +2 sectors look really good for this week. Regardless of what happens to the markets, I think this is the story here. The story is this is where the money is going, and it actually is a good place to be, even when the market is falling. So I think that's where you want to focus on your trending stories. Everything else, I think, is pretty flat. Yes, tech and consumer are weak, but I could easily see them having a bounce back. So to me, I really want to focus on those in the middle for sideways stuff. Let's take a look at the slots we actually have available here. We had 4 trades roll off here. So we had a max loss in healthcare, which I think was BMY. And then we had a max gain on our Tesla trade. That was a nice little trade. And then we had some small gains here on the others. That only leaves us with 4 trades. Last week we talked about how cash is a position. You don't need to make a lot of trades in a market like this. If you are a trend trader, and that's where you trade best, then this is just not the right market for you. And that's something that was really difficult for me to recognize as a young trader, was that I always wanted to be trading. And there were things that I did really well in certain market conditions. And then in other market conditions, I struggled. And I kept trying to fix, why am I struggling? Why am I struggling? And trying to fix it. And when I finally realized, hey, just trade less or don't trade at all during those periods of time, all of a sudden, everything greatly improved. So look, if you are a heavy trend trader and really looking for those, 2-week swing trade moves, this is not the market for you. You need to either change some strategies up or just to sit out. It's just not the market for you at the moment. So we're going to stay at this 0. We're going to stay at this 0, meaning we're going to be equally balanced across the board with our net delta. And you can see I'm going to add on 5 more trades this week. We've got sideways in utilities. We've got a bull in real estate, a bull in financial, one little bit of a bear in consumer, and in neutral. As you can see, this is going to lead us to basically just slightly leaning to the bull side, but that is all. Let's take a look at some of these possible trades. Let's go ahead and start off with that utility trade. This is CEG, Constellation Energy Group. This thing looks like it has a fairly big range, but whenever you have a higher price stock, I always like to just shift the decimal point over. So basically this thing at 250 is running up to 32 down to 22. So basically the same of a stock moving from 22 to 32. That's a fairly good range. So we're going to try to find out where this thing is going to be as far as the center goes. And this is where on a butterfly you have to really decide, okay, do I want to be bullish, bearish, or do I want to be somewhere in the middle? And on this one, I think we're going to get a little bit of a bounce higher. Just a little bit of a bounce higher, but not much. I think we're going to stay under this moving average. So I'm really looking at the 220 to 280 range. And I actually am going to be pinpointing 260 for my midpoint. So I'm looking to play this right in this range. 240, 260 to 280 butterfly. That's going to be, again, for March 14th, so 2 weeks out. If you want to go a little bit wider, then add on another week. That should help you stay in that range. Right, next up, let's go to real estate. Real estate, this is a great looking sector. Here is Prologis. You can see we've had a nice little, let's call it ascending triangle pattern, high base forming. We just broke out of that. And again, I love the fact that this week was a really challenging week for the market. This thing didn't even notice. This thing just opened up and went higher and just ground its way up there. So it's trading right around 124 at the moment. I've already determined I'm going to be doing a plus two. So I'm going to have to do the 125, 130. And I'm going to go all the way out to March to give myself more time. That's a 3-week trade. Give myself more time for it to run up to 130. If you don't want to be that directional, then take a look at something else. You can play the 120, 125. It's going to be non-directional, bidirectional, and you're going to get some theta along with a little bit of your delta. Much more conservative play based on how you want to play it. But I do like this sector. I'm going to play a little bit more aggressively on this one. Financials, the other sector I really liked. I would have done a plus 2 or a plus 3 on this, but the market is not that market at the moment. So I actually liked real estate a little bit better. I think it's held in a little bit better. So for this one, I'm just going to do a plus 1 trade. Here is JP Morgan Chase. So you can see very nice textbook run to new highs, pull back, right at the 50-day moving average, found support. Again, what I liked was that this thing held up, held its 50-day moving average while the market was plummeting. And then once we had a decent day, closed right up at the high. So I really like this trade, but I've already determined it's going to be a plus 1 trade, which means I'm looking at this really wimpy 260, 265 bull call spread. I'm not looking to be a hero in this market. I'm looking to try to grind out some nickels and some dimes and maybe a quarter here. But that's just where the market is at the moment. Do not expect there to be big returns in this kind of market. That's just not where it is. You need a nice trending market and able to generate those returns. And that's just not it. So JP Morgan Chase, there's a ton in the financial sector that you can play. There's lots of good looking trades in this sector. Our short was going to be consumer. So here is Lennar. Lennar is a home builder. All the home builders look absolutely atrocious. Now, yes, they didn't fall apart when the market fell apart. That's something that we need to recognize. But it also didn't bounce when the market bounced. This is telling me that this sector is severely out of favor. Now, look, it's already been sold down quite a bit. Maybe there's not a ton of downside left on it, but on a negative 1 trade, we're not looking for a ton of downside. We're just looking for this thing to stay weak. So this is going to be the 119, 123 bear put spread. So basically right where it is, up to 123. This is how we're playing it. We just think it's going to be weak, and if it blows past 123, we'll take our max loss on the trade. But if it stays weak, this is going to be a nice trade out to March 14th. Materials was our 0 sector, so I want to do a sideways trade on it. I gotta say, I didn't find a ton of sideways stuff that I really love, so I came up with this GOLD Barrett Gold. And after a big fall, we basically have found a range between 15 and 19. And I'm going to make this play basically on the premise that it is not going to pull back and break out and go to new highs. It is going to be stuck in this range, which is just absolutely fine. That's a decent trade on this. The sector is not telling me it's going to go up. Everything is telling me it's likely to stay sideways here. If you're looking to be short term, that March 7th, play 150 strikes. So again, the 1650, 18, 1950, which is going to be just a slightly bullish, very, very slightly bullish butterfly. I'm looking to go out to the March 14th, and I'm actually going to be pretty much dead on here. So I'm looking to do the 1550, 1750, 1950. So I think it's going to hang out in this area, and that's going to be where my butterfly is for that profit. Let's go ahead and wrap this up. I think you just have to expect this volatility to continue. We are in the first stages of the new president's agenda. Lots of changes, way more than normal, and that's going to affect market conditions. This is all going to mellow out at some time, but for right here, right now, higher volatility and worse trends and getting whipsawed. If that's not the market you like, cash as a position. Do half position trades. Do less trades than you normally do. Put less capital out there, and all of a sudden, this will affect you a lot less. Put no capital out there, and this won't affect you at all. But there are some stories there that I think can be played. I think, again, the financials and the real estate sector look good. We got 4 sectors that actually are in a pretty decent trend at the moment and don't look to be negatively affected by this selling in the market. I think that's where you want to stay. Thank you so much for joining me. Everyone have a great weekend. Goodbye, everyone.